Let's also talk about HUL because that also reported an inline set of numbers. That stock was down and out in trade, down to the tune of about 4% coming in for that one on the back of cautious management commentary perhaps, and even the margin outlook that failed to also woo investors. That is something that we were looking at in terms of the stock move being reflected as well. Let's also go across to Snehi, who's standing by to take us through the numbers. Snehi, over to you.
An inline set of numbers coming in from HUL for Q4. Let's take a look at what the earnings fine print is. Revenue has come in at 15,214 crores, in line with our estimates, uptick of 2.4% year on year. Net profit has gone up by 3.6%. EBITDA is also up almost 1%, largely in line with what we were expecting. EBITDA margin has come in as expected, slightly under pressure at 22.8% compared to 23.1%, down 34 bips on a year on year basis, but nonetheless in line with what we were expecting. Q4 underlying volume growth, which is their UVG, was up 2% and underlying sales growth was up 3%. If you take a look at the segmental performance for home care, while the revenue has gone up by 1.8%, we were expecting this number to be of 3% the growth, so that's a miss on our expectations. There's also been a mid-single digit volume growth. For personal care, the revenue change is up 3% revenue growth. This is a beat compared to our estimates. There's been a low single digit volume decline, however, in this segment. Beauty and well-being up 4.2% in terms of revenue, and low single digit growth is what we've seen in volumes. And lastly, for food has been a big miss compared to our expectation. There's been a degrowth of 0.4%. We were expecting a growth of 0.1%, so mid-single digit decline in volumes is also being seen. So foods is something that has kept the stock in pressure. In terms of management commentary, they've said that the Pureit demerger will be completed by FY26. They expect growth to gradually improve. Important to note that they have reduced their margin guidance slightly. Earlier in the previous quarter, they had said that this will be on the lower end of 23 to 24%, and in their earnings for Q4, they said that the margin guidance is now between 22 and 23%. And they have also said that they will continue to focus on driving volume-led competitive growth, and if commodity prices remain where they are, they will see some volume growth going ahead. So that's low down on HUL's numbers, in line set coming in for Q4.
If you like this video, then like, share and subscribe to ET Now.